Hello and welcome to the Friday edition of the Sharesify podcast. I'm joined as always by Steve and James. How are we doing, chaps?
Hey Ian, good.
Very well, thanks.
Now, US markets closed today because normally it would be closed on the 4th of July for Independence Day. It's July the 3rd. But even so, Steve, that hasn't stopped the news flow, has it? There's some huge news out of one of your stocks.
Well, at least it's not SpaceX, Ian, but it is another
Oh,
technology.
you mentioned it.
It is another technology name. We're talking about Meta platforms here now. Everyone's familiar with Facebook and WhatsApp and Instagram to a lesser degree, perhaps. What it's basically positing, and it's not set in stone yet, but the idea it's floating around is that it's building all of this data center capacity, and it needs much of that for itself, for its AI ambitions. However, it's going to have some excess capacity. So what he wants to do is set up his own internal business that's going to resell that capacity. So much like AWS is a big public hyperscale platform, and Azure from Microsoft, Google Cloud, Meta basically wants to set up a business in that space. Now, very, very crowded space and dominated by the three companies I've mentioned. But of course, Meta's got very, very deep pockets. So they've got a lot of scope to make this work. Now, what the investors are saying about it, what they're seeing with this is rather than data centers now being just a CapEx sinkhole, it's now potentially got a revenue generation element to it as well. Now, that's what's attracting investors. But of course, it's going to be about execution. So we'll see how that plays out. There's more details on our website. We've written a piece about it, so go and have a read of that if you're curious. But quite an interesting story, certainly.
Yeah, absolutely. And AI, the whole thing is evolving, isn't it? I'm noticing a lot of commentators talking about let's not just data centers and chips and bottlenecks and so on. Are there other areas that might benefit from AI? And one area they're coming back to again, which was mentioned kind of almost at the beginning, was healthcare and pharmaceutical and drug discovery and that type of stuff. Now, we know Moderna, right? It was a big stock for Scottish Mortgage before SpaceX was a big stock.
Yeah.
Moderna was the big stock. I was looking at that at the end of last year. It was about $30 and had a very good Q1. It went up to about $60 actually, and then it kind of drifted back. And then this discussion came up again. So I went back and had a look in early June. $45. It's $80 now in the space of a fortnight. It's
Right, that's amazing.
Gone up. It's shot up again. And it's really interesting because you think, okay, is there an opportunity here in some of these things? You look at Glaxo, it's up about 8-9% this year, but the analysts hate it. There's like, as many sells as there are buys, and most analysts are sitting on the fence with a hold. Astra, it's just gone nowhere really this year, although analysts are really bullish on it. So I think it's going to be worth doing a little bit of digging into some of these pharma stocks and see if there's an AI angle. We wrote about this a long time ago. I need to go back and kind of revisit this, but that could be an interesting area for people, don't you think?
Ian, as well, on a slightly wider note as well. I mean, we've been discussing with fund managers recently. We spoke to Emily Whiting of the JP Morgan Asia Growth and Income Trust, and she was saying exactly that about the AI story is a much deeper story than just about data centers and just about chatbots. We are talking about a whole massive ecosystem, and that's where the real value is when you have this entire ecosystem. So you've got loads and loads of suppliers, even think down to energy generation. You've got to power these data centers, power all these tools. So there's a whole massive ecosystem and supply chain that's really under the radar. And Emily Whiting was pointing that point, making that point to James and I on that podcast. So listeners, if you're interested, go and check out that podcast. It's available in our podcast section. It's got some really good insights into Far Eastern supply chain companies, opportunities that you would never have heard of. I've never heard of them.
No, I missed that one. I sat that one out. It was you guys, wasn't it? But another area that people are talking about is consumer stocks. And James, another good one, another good report this week from a big retailer.
Yeah, I mean, bringing things back to AI, Currys is the biggest AI laptop seller in the country.
Is it
and
now?
they delivered, yeah, and actually the retailer's widened its total addressable market, or the TAM, to 48 billion, and it's got less than 10 billion revenue today. And this is all to do with that AI tech cycle, business to business revenues and services. And Currys said trading in the early part of the new year is very solid. So, the
Yeah.
consumer seems to be holding up quite well.
That's really interesting, James, because we spoke about a week or maybe 2 weeks ago about the comments from Tim Cook at Apple and about price rises and whether or not that will flow through to the high street. And Currys is a great example. And we wondered what the tone of the commentary would be. And as you rightly pointed out, surprisingly upbeat.
Yeah, and we've got another big week next week, haven't we? Ian? We've got an M&S Q1 update, and we've also got a half one update from the Gym Group. I don't know if you've got any thoughts on M&S and what we might expect.
I think M&S will be driven by the food business because we know that's now bigger than the general merchandising business. And according to World Panel, I think the 12 weeks to the middle of June, which is almost their whole Q1 basically, because Q1 for them runs from April to June, end of June. I think they don't class M&S as a food retailer because it's got general merchandise as well. But food sales, they reckon, were up 12%. That's in a market that grew 1.5%. And Ocado sales were up 14%. And of course, that's a 50-50 joint venture with Mars. But I was interested. You've had a few conversations with fund managers about consumer stocks, haven't you? And you put up 8 names that are interesting.
Yeah, it was just to, with lots of investors overexposed to AI and tech, we just thought we'd ask a few fund managers and an analyst what perhaps more prosaic names that are doing well. So a few retailers, a few consumer names that are using AI, but also have their own structural drivers. So we've written an article on the website. Do check that out.
Yeah, absolutely. Steve, going back to tech, you've got Bytes next week.
Yeah, so Bytes Technology is it's perhaps
What does it
slightly
do?
lesser known, but Computer Center, big IT reseller of products and tools and stuff. Softcat also in that market. Bytes is this third really big player. It's a FTSE 250 company. It's of significant scale. What's been going on in the background is about companies addressing their AI needs. How can we use AI tools to either generate growth or to create operating efficiencies? And so they've been seeing the whole sector's been seeing a lot of demand from corporate IT departments. How can you help us make the best use of these new tools? And that's what effectively going to be really setting the tone for. It's a Q1 AGM update for next week, and we'll want to see momentum. It was quite strong in the second half of last year. Investors will want to see that momentum has continued into the start of this new financial year. So these are going to be the questions I think that will either move the share price or make investors go to sleep.
Yeah. The other thing I was going to say, chaps, I caught was your chat with Samantha Fitzpatrick at Murray International. Very interesting. So for listeners who don't know it, it's a popular income trust. It's an AIC dividend hero. How many years, James, has it raised a div?
Yeah, over 2 decades. It recently got dividend hero status. I think it was in 2024.
Yeah, it's 21 consecutive years
That's right.
it's done. Most recently the 21st year. So an amazing spread of opportunity as well, and it's got a sort of a mid 3.5% yield, and that's really part of the key part of their ethos is they want their shareholders to enjoy a decent quality yield, so they look to manage that very carefully. But they've got some amazing companies in their portfolio, companies that don't generate huge yields. So it's a real balance. It's across the globe. It's a real balance about finding good growth, but some income and other high income stocks balanced with slightly lower growth. So a really broad spread of investments.
Yeah, it's a really interesting podcast. So for anybody who hasn't watched it, it's on the or listened to it, it's on the website. Make sure you do. With that, we'll wish you a good weekend. Obviously, good luck to the boys on Sunday night, Monday morning. And we'll catch up with you next week and hopefully be celebrating.
Yes, let's
Cheers.
hope. Cheerio.
Cheerio.